we're not talking about you going to bust your butt to run another business. We're talking about you to use your IRA or 401k to invest in these opportunities, using your knowledge and expertise that you've built over a decade or 20 or 30 years in whatever you've done, whatever industry you've been in, to find those business opportunities where you have that insider knowledge and information that can work in your favor.
The point being is, when you're out deciding to invest in a small business, know right out the gate, is this going to integrate vertically with what I'm already doing? Do I have some inside knowledge in this vertical delivery system? Or is it horizontal? I could go left or right. And that's really where you see your opportunities, because the trick here is you have some sort of inside game.
We are on number 5 in the Getting Started Self-Directed IRA series. We're going to be talking about investing your IRA or 401k into a private company, not on the stock exchange. It's going to be a small business in your neighborhood even.
And this is where you get to do what's called insider trading.
Yeah.
And this is actually a good point, because it's really perceptive, because a lot of people think, well, if I go buy a company with inside knowledge, I could get in trouble. Like if I know there's a good deal, isn't that, Wall Street corporate insider trading, someone's going to arrest me? That's only if it's a public company.
Right. And you have public information about a company or private information that's not public yet. But if it's a small business in your community, if it's a startup or whatever, and you got the inside track on it, you can invest in it with your IRA. A lot of people are just used to, like, buy Apple or something on the NASDAQ or the New York Stock Exchange. Nope. From when IRAs were very first created, you can invest in private companies. Here's the problem. Fidelity doesn't let you do it. Merrill Lynch doesn't let you do it. TD Ameritrade doesn't let you do it. Why? They're a broker-dealer. They only let you buy publicly traded stocks that broker-dealers sell. So you need a self-directed IRA.
Yeah, there's no ticker symbol for the cupcake shop down on Main Street around the corner. You can't go to the back of the Wall Street Journal and go, what's your share price today?
But that cupcake shop could be the next Krispy Kreme or whatever. That could turn into a public company. And really, if you think about it, every startup, well, you can just call it a small business. I mean, whatever. Small business, startup is the same thing. Every big business is publicly traded was once a small company.
Yeah, and that insider knowledge you might have about a certain recipe or process or
the
niche.
KFC secret recipe for chicken. I don't know where you're going there.
Yeah, well, no, yeah. I mean, if you're like, oh my gosh, this restaurant down the street, stick with restaurant for a minute, is the best kept secret.
Yeah.
I know this is going to franchise someday. I know this is going to go big. The owner just doesn't realize it.
Yeah.
And, well, there's nothing stopping your retirement account from investing in that. And we're going to give you some of the things to be aware of and due diligence and watch your step. It can be risky. Public companies have a lot more protective mechanisms in place to protect an investor from getting ripped off. But I guess I could say it too. This private company investing is like the wild, wild west. Yeah, it's exciting. You can roll into town with your 6-shooter and just be ready. Yeah,
I mean, more risk but more reward.
Yeah,
if you pick them right. And but let me talk about why. Okay, I want to talk about 2 reasons why. One, if you're picking good small businesses or startups that are going to become bigger businesses, they could be selling to a strategic or to private equity. They could go public, and you could get a big return on your money. So one concept is just like, these could be valuable investments, and I have more opportunity to invest in those. The other angle of this is, I want to do it in my Roth IRA in particular and pay 0 tax. And so that's like, let's just say you could have invested in Facebook before it was on the public stock exchange, before it was a publicly traded company. Maybe you could use your Roth IRA to buy Facebook stock before anyone else did and be the first outside investor in Facebook. And then you could have made a $500,000 investment, and that could have made you $1 billion. And if you did it in your Roth IRA, you would have paid 0 tax on all of that gain. If you could have done that, wouldn't that have been cool?
Yeah, no, and so we have...
Peter Thiel did that.
Yeah,
I was trying to set it up for you. Okay, okay, that's like that's happened. Yeah. Okay, like there's people, we've had big accounts at our office that have invested in companies that have been startup or small businesses that have turned into big companies, made significant rewards and had huge benefit. going into the Roth account
Yeah,
tax
I
rate.
was just trying to go in slow and go, now we all can't be like Peter Thiel. You know, this is one in a, you know, he had a diamond in the rough there, and that's, and no,
and that's
it's,
just the
it's
famous
incredible.
example.
Yeah,
I mean, I got the client that's invested in a wild Buffalo
you know,
Wings franchise.
It's funny how this show is, the tables have turned today. Usually I'm the one like running and gunning. Yeah, go for it. And Matt's like, okay, let's slow down. There's a little bit of risk here. Now today I'm kind of like, okay, everybody, let's, you know, be careful. I don't know. So no, it's just, the reason why I would say this too. Yeah, you might hit a home run. That's beyond a home run. I mean, that's like the commercial where they shoot they hit that home run that goes around the world and lands it back in their barbecue. Oh, I can't remember what commercial that was. But anyway, what the goal here is, where are you going to get the best rate of return with your retirement account? And I want to actually share something my son Dylan said the other day. But first, the point: if you know that an HVAC business, which is kind of a hot little niche right now in service industry, lots of opportunity for technology growth and expansion, yada, yada. So let's say you know that there's an HVAC business down the street in your small town where if you were to inject it with some cash and help them get on track, it could be an incredible return for your retirement account. And maybe you make 20%, maybe you make 25%. Maybe it goes franchise and you quadruple your money. Who knows? But the point is that 5 to 10% in a mutual fund or ETF serving you? Could you do better? Now, that's the concept. Why you would ever do this? You're like, I see small businesses that I could take some ownership in and really turn around in some way and make some more money for my retirement account. But it's interesting. My son the other day, he was asking me again because he was making some decisions with his retirement account. And I got excited and talked about this and all that. Yeah. And he's a young guy, small family, couple kids. And he's like, all right, that's too much for me. I've got enough on my plate. I'm trying to pay the bills, build my own business right now. Managing my retirement accounts investments looks like a much bigger job than I can handle right now. I'm just going to stick with the stock market for now. Yeah. And I said, okay.
That makes sense. And that's just whether you're doing a real estate deal, a small business, or a private fund, a private company, a startup, whatever it may be. I mean, self-directing is not for everybody. And it might be for people at different phases of life. And, you've got more time to invest, to look at good deals and analyze them. You've got a little more experience and expertise. And I'll just give you one example. This is it's not like the Peter Thiel home runs, but it could be the little franchise business that I've had a client that has a couple $1 million in an IRA from a super profitable little Buffalo Wild Wings franchise, That was it.
Love it, yeah.
But then I had a couple of dentists, that invested in a mouth guard business. But they wanted to invest in what they knew. And they're like, well, I could go invest in, the best toothpaste company on the public stock exchange. But am I going to get big return on that? Any value is kind of priced in, but where can I use my expertise and what I see is going on in my space? And so it's a group of them. They invested in mouth guards, and they saw the need for it, the price point, the benefit of the product. Look at the leadership team. Who's behind it? This is other people that have been in the space that know what they're doing. They're proven. And so but if I can invest now before it goes public or before some bigger medical device company buys it, I could get a much greater return on my money.
All right. So I think we have definitely unpacked the why, and I think it's summarized with the point: you can get a better rate of return, have a better opportunity, more control of that retirement money that you've socked away that's so valuable. Yeah. A couple important concepts. If you're catching this series, I think this is part 5 in our series of getting started with self-directing, is there's a process, and you've got to understand, okay, what are the steps next? And being careful and getting your money pooled. And this is not a situation of taking a loan out of your retirement account. You're not withdrawing the money from your retirement account. There's no penalty. There's no tax. You're just shifting the investment from Wall Street to Main Street. And get back and watch the other 4 episodes in the startup series so you can understand that. But
let's explain what that is.
Yes,
in 30 seconds. I mean, we can do this gone in 60 seconds maybe.
Okay, there we go.
30,
I'm with you.
Okay, Nick Cage.
Yep, there we go. All right, I like that.
All right, so your IRA at Fidelity, TD Ameritrade, is a broker-dealer. It's a broker-dealer IRA. You can buy stuff that broker-dealers sell, publicly traded stocks. If you're like, I want to buy the small business or the private company or the startup, they're like, you can't do it. Not because IRAs can't do it, because broker-dealer IRAs can't do it. So you need what's called a self-directed IRA, which is what we do at our company, Directed IRA, where we let your IRA invest in a real estate, in small business, in a private fund, private company, crypto, whatever asset you want. It doesn't have to be publicly traded.
There we go.
So you transfer over the money to us.
No penalty, no tax. And this happens simultaneously. If we're talking about timing, after this podcast, it's funny how the universe works. You're thinking about buying a white car. All you see is white cars.
Yeah.
If you're thinking, I might invest in a small business in my local area, all of a sudden you're going to see small businesses for sale. So it's kind of a simultaneous thing. You're going to be identifying opportunities, not pulling the trigger. We're going to talk about due diligence here for a moment. Very important conversation. We have whole podcasts on that. But meanwhile, you're like, I'm going to move this money. And so wherever your broker-dealer money is, there's no penalty or tax to open a self-directed account, get it transferred over. Now we're in business.
Yeah. Now you can invest in an asset you know and believe in, or diversify your portfolio, or whatever the opportunity is, however you want to approach it from your why. But that's the how. It takes a self-directed IRA. We do this every day at Directed IRA. We're the #1 company in the space, is fastest growing, best customer service, #1 technology. You just can't beat us. Yeah, you just can't.
Oh, and I have a funny, I went down, we're here in our Phoenix office, and I go down yesterday, Matt, this is interesting, and I had a check from Kohler Dutton Livestock.
Oh, nice.
I was like, the money's just been kind of languishing in this LLC, and I emptied the account. I'm closing down that account and putting the money back in my HSA for a new investment.
Yeah.
But this may be interesting for some of you. I went through the same process. Just back in our example, I had found a cattle deal that I wanted to do. This was up in Idaho. There's some social media posts on this. It was a lot of fun. I bought some cows. We'll leave it at that. And I started the Kohler Dutton Livestock Company. And I found a rancher that would partner with me. So it was so think of it like that. I kind of invested in his herd, and I bought some cows, and I made about a 20 to 25% return, because I wasn't a typical rancher that keeps their cows because they get emotionally attached. I was like, what's the cattle price? Sell. And the rancher was like, you're selling them? I'm like, yeah. It's a business, for crying out loud. You wonder why you're driving around a beat up truck and land rich and cash poor. Anyway, so then I sold, and the money was just sitting there in that LLC. And so yesterday, I went down to the 4th floor with my checkbook, and I drained the account and put it back into my health savings account.
Yeah.
And so I'm pooling money in my HSA. I already made my contribution for this year. I got a new project I'm excited about. I'm not going to share that right now.
Okay. All right. We'll get to that in another episode.
But we're out looking.
Yeah.
It's exciting.
Yeah. So as you see these opportunities, whether this is John Dutton type of partnership you want to cut for some cows, or whatever small business this is.
I like that mouth guard for the dentist.
Yeah.
Because what it means, you invest in what you know.
Exactly. And I think that's where people have success. And I got so many examples in that. There's a lot of groups that open accounts with us that invest in startups and small businesses. There's Tech Coast Angels that invest in technology companies. It's a lot of people from the tech space.
Can I throw
There's Meta Angels, which is people in the medical space that are doctors mostly that invest in medical-based or healthcare startups or businesses.
Yeah, and some of you may have never heard this. This is kind of a master school, business school concept that you'll learn if any of you have been there. So I want to share something very important. It's called vertical integration or horizontal integration. Now, this is where the opportunity really lies. Horizontal integration means I own a cupcake shop. I own a small bakery, okay? And I'm going to horizontally integrate means I'm going to buy the Mexican restaurant down the street. I'm going to go buy the burger joint on the corner. They're all in the same industry of restaurants. I'm just going to own the bakery, but I'm kind of good at running this bakery, and I see this Mexican restaurant just flailing. So I think I could buy into that as a minority investor with my retirement account, or majority. There's some issue. We'll talk about that. But I could go into that restaurant. It's horizontal to what I'm doing. It's in the same industry. Vertical integration is, okay, I've got a bakery, and these racks that I buy to hold all my cakes and pies and cupcakes, they just suck. They're just terrible. And I have the hardest time. I'm trying to go to Home Depot. They don't have what I want. I go here, go there. And I found this little metal fabrication company 2 cities away where I found the perfect racks, and they don't even know what they're sitting on. These racks could be amazing for any baker or restaurant. And you walk in the door and go, what the hell are you? Can I buy into your business? I really think I could share some ideas with you. I want to buy in, be a minority owner, or who knows what level, and I'm going to buy into that business. It's vertical. Mm-hmm. It's a vertical. I could go and buy trucks for delivery. I could buy racks to hold my pies and I could buy cupcake paper, whatever. But it's in my line of business. That's vertical. So the point being is, when you're out deciding to invest in a small business, know right out the gate, is this going to integrate vertically with what I'm already doing? Do I have some inside knowledge in this vertical delivery system? Or is it horizontal? I could go left or right. Mm-hmm. And that's really where you see your opportunities, because the trick here is you have some sort of inside game.
Yeah, and that's how you make a lot of dough.
Oh, dude, that was awesome. We didn't even practice that.
I was smiling 30 seconds ago. I'm like, I got a good one. I'm just waiting for him to finish and throw that one out there.
I love it.
But I love that because it's also like, what's your angle? Just keep going. What's your angle on how to make money? And I think the horizontal, another way I think would think about that is like, I understand the customer, in selling food. I understand the customer that's going to buy Mexican food, buy the hamburger, kind of the employees in that space. What do I do? And the systems you go run that type of a business, versus I really understand the bakery business and what a baker needs and the you know what I mean, the pain points there. And so as you understand that and you get a little deep in exposure into business, that's where you start finding business opportunities. And I love that. That was an awesome way to explain it, actually. I think that's a great way. And that is, I think, where successful people find their opportunities. And if you are a busy business owner, and so many of our self-directed investors are busy business owners.
Yeah, kind of like back to Dylan.
Yeah. They are like, I'm so busy in my business, but they might have money in their retirement accounts. Their spouse may have money in their retirement accounts, and they're going to see these opportunities. We're not talking about you going to bust your butt to run another business. We're talking about you to use your IRA or 401k to invest in these opportunities, using your knowledge and expertise that you've built over a decade or 20 or 30 years in whatever you've done, whatever industry you've been in, to find those business opportunities where you have that insider knowledge and information that can work in your favor.
Yeah, and this is a great inroad to our next point, and that is, what are the boundaries? Now, we have a whole other podcast on prohibited transactions, and that was, I think, step 2 or 3, whatever, early on.
Number 2.
Well, which means I can't go buy that Mexican restaurant down the street and work in it, take a salary, run the operation, buy the majority of it, and think I can just go crank in there. But what I could, that would be prohibited. Now, could I go buy a minority interest? Now, this is where I think the real opportunity is. So let's just stick with that horizontal integration. You understand the customer. You know the Cisco rep in the area for food cost delivery, and you have all these connections that would help that business. And so you go in as a minority owner. You might be a 20% owner, 40% owner. You're going to inject some cash. You're also going to want to be on the board of directors, board of advisors. You're going to tell this business owner, we're going to level up. We're going to clean up your LLC. We're going to clean up your corp, whatever it is. My IRA is going to own part of this. If they're an S corporation, we're going to change the structure of the restaurant a little bit. This is why you'd work with one of our lawyers. It can be very affordable to say, I want to buy into that business. We're going to say, get it penciled out, maybe letter of intent, have a handshake that there's sign the non-disclosure agreement. You get this guy, gal, whatever, get him on a phone call with the lawyer and say, hey, we want to make this deal happen. We're deal-making lawyers. We're not, go get a lawyer and let's start fighting this out. That's a waste of money. So we'd love the lawyers that understand how to use retirement accounts, get that business owner that's selling or willing to sell a portion, get you on a phone call, on a Zoom call, and say, tell us, what are you contemplating? What are you thinking about?
Yeah, and this could even be a new business starting out from scratch. We see a lot of those where the IRA is effectively the cash investor, and there's someone else who is the kind of the work partner in the deal, and they're coming in together. Maybe there's a combination of people involved, and so your IRA could be investing in that. But I think know your channel, though, of like how you're doing this, whether it's starting a new business or buying an existing business. Is what I don't want you to think about is, I'm going to buy a job. That's not what we're talking
about. Yes.
We're not talking about buying a job. Keep doing what you're doing, your job, your profession, your business, whatever it is. We're talking about investing.
And giving your retirement account a better chance of making money.
Yes, we're talking about investing in someone else that's going to go build and grow the business. Being the cash partner, buying someone out, like finding these opportunities I've even had clients that their retirement account owns it 100%, but they're not buying a job. They're hiring a management and leadership team with the money in this account to go and start it and get it off the ground. And they might give them some equity. They might give them some stock options. They might give them other incentives down the road to get a piece of it.
Yeah, and I want to just give a shout out to a family member of ours. My name Patty. His name's Jonah. He owns. He's part owner in. I'll just leave it at that. And running a Mexican restaurant on this store note down in Tucson, just a few hours from here. I've got a call with him tonight and another project. And so...
How's his huevos rancheros?
You know, he is an incredible chef. He knows what he's doing with Mexican food. He's good.
So anyway, but think of him out there running a small restaurant with some partners or doing his own thing or whatever. But my retirement account says, oh my gosh, I need a Jonah. I know restaurants. Again, I'm in my bakery. I know I could do it better, but I need a guy or a gal that can run that business, that's just going to love it, be a part of it, be a part owner. And my retirement account's going to essentially partner with them, whether you're buying in later or starting it from the outset. That's the concept. And it could be incredible because now you're a part of that from a director standpoint. You can be on the board of directors, helping make decisions, giving guidance, giving tips, giving relationships. You just can't work it.
Yeah. Yeah, let me be bad cop here for a second and tell you some things you can do. Okay, I'm not gonna kill things. All right, so when we talk about don't buy a job, and what we mean by that is the IRS doesn't want you to do that. I don't like that from an investment strategy anyways, but the IRS is like any company you or your retirement account owns 50% or more of, if it owns the whole thing, there's this prohibited transaction issue of you working for it and taking a salary, okay? Now, if your IRA is like, well, I'm putting my IRA for 1/3 and I'm going to work in the business with some other people and I'll get a salary for that and that salary is reasonable, that could be okay. But we don't want your IRA or you and your spouse's IRA or, any combination of these disqualified people owning 50% or more, okay? The other thing you have to be careful about is we're not talking about a business you already own or that your spouse owns or that your kids are, we're talking about third parties or new businesses. If you own an existing business, personally, your IRA can't come in and inject some cash in it to try and grow it. Okay, that's also a prohibited transaction. So those are a couple no-go areas. Let's just say that.
Okay, so I want to pivot and bring up one last topic here. And the purpose of this podcast is to really talk about that small business opportunity investment for your retirement account. But there's another, I don't think it's a drawback. It's just something to keep in mind. It's called UBIT, Unrelated Business Income Tax, or taxable income. UBIT, UBTI. This is a type of income that the IRS says, hey, if you want to invest, that's cool, in an investment type business like rental real estate or some passive income project. When you invest in that Mexican restaurant down the street, that's an operational business. And if your retirement account's not going to pay tax, it's not fair that you're not paying some form of tax like the other business owners that have other restaurants on the main street. So this type of tax is something that's imposed to keep a fair playing field, if you will, for all the operational businesses in town. Now, we have a whole other podcast for this, but I just wanted to dip my toe there and say you need to really listen to that podcast, but which is coming up here in part 6 or 7, I think. But that's a very important one.
Yeah, there's a number of ways to structure around that or plan for it and do C Corp blockers where it could only be you. The whole company doesn't have to be a C Corp because it should be the retirement account, invest in an LLC 100%. It's taxed as a C Corp, and that LLC partners in an LLC that is the main entity in the partnership, and that other owner in the LLC could be an S Corp. Okay, I'm giving a big concept there, but just know there's some structuring to be done there, and that as a tax to look out for that could apply in your scenario. All right. Well, I think the last piece thing is just some due diligence items here. So as you're looking at particularly an existing business or buying a business from someone, of course, the main thing I want you to focus on is the financials. Okay. Is this business and the financials actually accurate? You're buying income typically if you're paying money for a business. And so we want to make sure those financials are true, and you want to see profit out of the business. So Now, whether you're doing a $10 million deal or a $200,000 deal, the amount of effort, your time you're going to put into this and costs and expenses of lawyers is vastly different.
Yeah. But I like what Matt just said. Look at really going hard at the numbers, getting some accounting and legal support. You're going to be signing NDAs. They're going to be turning over tax returns. And for the average person, this can be a very challenging process because it can be a little scary going in and looking at financials and what am I looking at here? And we have another podcast on due diligence, several over the years. They're so important. So we're just going to our podcast history there. The second, I would say there's two things, and there's a bunch, and we do podcasts on this. If Matt's going to say financials, I'm going to say the person. Who are you investing in? Because the financials are going to tell one story, but who is this person? How is their marriage? How is their family life? How are they in debt up to their eyeballs? Are you throwing them a lifeline and they're just going to get back into the same problem? Do they have addictions? I mean, go hang out with these people. Go find out who you're going to be partnered with, because that is going to be a key indicator in the success you're going to have. But there's so much on the due diligence topic. I was just
Yeah, so obviously just don't pass that up. I think one of the hard things is people are investing, particularly people newer to it, when they start getting outside like the stock market, is they get excited. And that excitement, they then are like, well, I got to go do something. And like, I got to go take action. I got to do this. And we love that. I love those drivers and those people who are entrepreneurial. They're like, we got to go take action. Yeah. Let's slow down for a second here. Okay. Let's make sure we're doing a little bit of due diligence, understanding what we're investing into, who we're investing with, and have a good business proposal and write this out, pencil it out, run numbers, run scenarios. What's the best case scenario for this? What's worst case scenario for this? And like start thinking through it, be a little analytical about it. Don't just, go with your heart on this thing. Let's get the mind going and have some little analysis to it. And, but we want to make sure everybody knows this is an option. Okay. It's not on the menu in your brokerage account. It's not on the menu at Wall Street, but it is frankly the heartbeat of America's small businesses. And you can be investing in a small business in your community, in a startup, in your friend's business, in something in your industry you see, as Mark talked about, the horizontal or vertical things that you see where you feel like there's opportunity. You can actually tap your IRA or forward key to invest in it and get all those gains that could be substantial if you pick the right ones back into a tax advantage account like your Roth IRA or traditional IRA.
Well, very well said. I will just say amen, kudos, 5-star, 2 thumbs up, all of that. So thanks everybody for listening. Please, as you've already felt and hopefully inspired by, there is so much to learn here. It could really be a game changer for your future, your retirement, your investments. Thanks for sharing your valuable time with us, and continue the series. Finish this 10-part series that we've been really dedicated to, and there's so many other podcasts in our history there where you can unpack all these little side roads to this topic and have a lot of fun doing it. We'll see you next week.